Hey guys, Troy here. Welcome to your Wise Wednesdays. Apologies, I just got back from the gym and I'm a little sweaty and smelly. However, I thought I'd quickly do this tip for you guys given it's Wise Wednesdays and I didn't want to wait around any longer. So today I just wanted to do a quick tip around the advantages and disadvantages of spending time in the marketplace versus timing the market. And I know if you're a home buyer or investors, you have a tendency to maybe sit on the sidelines and wait for the perfect entry point into a market, or you'd rather, just buy and get in while you can and then sit on it for the longer term. So I want to discuss the advantages and disadvantages of doing just that today, guys. Stick around. All right, let's just quickly break down the difference between timing the market versus spending time in the market and what that means. So the first thing, timing the market. What does that mean? That essentially means that if you are a home buyer or investor, you're waiting for the optimum buy window to come into a marketplace to acquire an asset. So that could be, a particular point in time, whether it's months or years, you wait for the optimum window to then enter into the market. So you've essentially timed the market and wait for an upswing to then piggyback off the upswing that market is going through. So that's timing the market. Spending time in the market, all that essentially means is regardless of what is going on in that particular marketplace, you are buying a quality asset there, whether it's a home or investment, regardless of what's going on, whether it's going through a peak, a trough, a downturn, a crash. You've decided to buy in that marketplace and hold an asset for the longer term, and that's what spending time in the market is all about. All right, so one of the key advantages of, let's say, timing a marketplace, if we looked at that first, so the big one being short-term equity, right? If you were to time a market, short-term equity is one of the advantages. So if you think of it this way, if you are buying into a market that's on the verge of an upswing, let's say you buy an asset for $500,000. In the next 12 to 24 months, that asset, because you've timed the right entry point into this marketplace, could be worth $600,000 or $650,000 because you've essentially came in at the right point in time when the market's going through a resurgence or a growth phase and you've capitalized on that perfect time. So that's one of the advantages of timing a marketplace. Another advantage of timing the market is potentially buying something that is a bargain. So let's use $500,000 as an example. Again, you might have seen that home or a similar type home like the one that you propose to buy, sell regularly for $500,000. But given that you've timed the market where a lot of these once was $500,000 homes are now selling at $400,000, so you could potentially come in and buy a quality asset at a bargain. So that's another advantage of buying an asset and timing the market. All right, so what are the disadvantages of trying to time the market? One of the big disadvantages of timing a market is they're very hard to pick, right? The difference between high and low could be a month, or a difference between a growth phase and a lull phase could be only a couple of weeks. And these, in a particular marketplace, are very hard to pick. So it's very hard to actually pick the optimum buy window. And if you continue to wait around for it, you may never even transact in a marketplace, because that is one of the major downsides, is that picking the right entry point is actually very, very difficult to do. So that's one of the major disadvantages. But kudos for those that attempt to do that, or those that have successfully pulled it off. So kudos to you. We at my own business and our agency, we like to look at key data to sort of find the optimum buying window. However, for us to guarantee that at every step that we're gonna, let's say, time the market down to a T, it's virtually impossible, and we never make those guarantees to our clients. So that's one of the big disadvantages is, you just don't know when the optimum buy window actually is, and they're very hard to pick. Number two is if you are someone trying to time the market and you spend an insane amount of time out of a marketplace waiting for the optimum buy window, then what is the opportunity cost that's been lost there by you sitting out of that marketplace or waiting for the optimum time to buy in a particular suburb or area or town versus the opportunity cost if you were to transact, let's say, in another suburb or another area? What is the opportunity cost there? So that's one of the other downsides of, sitting out of a marketplace and waiting for the optimum buy window is you may, certainly lose some opportunity costs there and advantages, and some of the advantages of, getting into markets that are actually doing pretty well right now. All right, so what are some of the advantages of buying a property and holding it? So spending time in a market and not necessarily concerned about finding the optimum buy window or entry point into a market. So one of the big advantages of buying a property for the long term, regardless of what's going on, I think for number one, given that a lot of property buyers out there, whether you're a home buyer, investor, you're somewhat emotionally invested in the transaction. So if you buy and then you're in a market, then you don't have to worry about any of those emotions that come with transacting in real estate. So you buy a property, you hold it, and you're not riding the highs and lows of the marketplace waiting for the optimum buy window. You're not emotionally exhausted or emotionally stressed because you've just bought and you've decided to hold it. So that's one of the big advantages that I see when someone decides to buy a property, regardless of what's going on in the marketplace, is the stress factor and that emotion certainly taken away from the transaction. So one of the other big advantages I see if you're someone that just decides to buy a property and then sit on it and spend time in the market rather than timing it is a lot of the speculation now is taken away from the transaction. You don't have to worry about speculating anymore, because if you think about it, someone that's trying to time a market, you're always looking at data, you're always looking at realestate.com, you're always seeing what's going on in the news. You're looking at so many different factors that it creates a whole bunch of speculation about the marketplace. Anyway, so if you're someone that, let's say, is just decided to buy an asset and sit on it, you don't have to worry about that also. That's one of the other really good advantages that I like if you decide to buy a property and sit on it for the longer term and spend time in the market rather than try and time the market. Well, one of the disadvantages I see is also opportunity costs associated with, let's say, spending time in a marketplace rather than trying to time the marketplace. There is some opportunity cost potentially lost there, particularly if you're an investor and you've decided to, let's say, buy in a suburb that has a really good track record, but you bought at a certain time when not much is really happening in the marketplace, right? And you've held an asset, let's say, for 5 years, nothing has happened. What are some of the opportunity costs there that have potentially might have been lost, particularly if you're an investor trying to build a portfolio? You really want generally assets that have that short-term uplift so you can extract equity out, rinse and repeat and go again. So there is some opportunity costs that gets lost also if you decide to sit on a property for the longer term and decide you're going to buy a property at no matter what point in time or no matter what's going on in the marketplace because you want to hold it for the longer term. But there are some opportunity costs there that could potentially be lost if you were to maybe look at a potential buy window where you could have optimized, let's say, short-term growth if you're an investor to extract that out and use that equity to buy consecutive properties. So that's one of the disadvantages that I see anyway when you look to buy property for the longer term as opposed to looking for those optimum buy windows. But yeah, guys, that's Wise Wednesdays. If you have any questions pertaining to what's been going on in this video, what was explained, feel free to reach out to me and the team or leave a comment in the comment section and we can break that down together. Thank you guys and bye for now.